Hey, welcome back, investors. So, just like as my title said, what is a huge sell signal for Bitcoin? And I'm going to go over it right now. So, on my chart here, I've got the 20 day, the 50 day, and the 200-day moving average. And so we can see my 20 day is the red line, is this guy right here. And then the 50-day green line, 200-day is the blue line. And what is one of my big sell signals is whenever Bitcoin goes below the 200-day moving average. And if we just look back on the chart, we can see way May of last year, everything is looking great. They're on top of each other. So we've got, what I mean by that is we've got the 20-day on top of the 50 and then the 50 on top of the 200-day. That is a pretty good sign of a bull market when it comes to trader methodology. And you can see we had that huge pump up, and so the 200-day went down here. And even if you were to set your sell signals at the 20-day, you would have essentially saved yourself a lot of headache. I know when it comes with the S&P 500, most traders, they say, hey, you got to go into cash when it's below the 200-day. So that the crash of 2008, and you would have just been able to save a lot of your headache. So this is the S&P. It's an EFT that tracks the S&P 500. And so, back in 2007, 2008, we were hitting all-time highs, and boom, it goes below that 200-day moving average. And then everyone keeps kind of buying more. It gets close there again, but then boom, falls again. And then it takes to 2013, from 2008, to reach its levels again. So we're looking at 5 years to just get your money back. That is crazy. And so traders, they try not to have opinions. They don't really look at a whole lot of news. They follow the trends, and well, a trend trader does. They follow the trends and what the charts are telling them. They follow their signals, so they're not trying to get a whole lot of their emotions involved, because when your emotions get involved, you can get into trouble. And I know with cryptocurrency, it's not super new. It was invented right around the same time here, 2009, when everything was going down bad, but it's since become popular. And I know there's a lot of young investors involved that don't essentially know exactly what they're doing. And I know especially in December, everyone was putting money in. And that was all good because, again, we were in this massive uptrend, where the layers, the moving averages are on top of each other. And so you could just literally keep putting money in and it keeps going up. But then as it goes down, I know I've been guilty as well. So I'm not going to lie. It's what traders call trying to catch a falling knife. We try to put more money in because you can't predict the bottom. And for that matter, you can't predict the market. One of the big sayings is there's no bullish way or bearish way to the market. There's only the right way. And so you only need to be on the right way. Well, the right way, the side of the right way, if that makes sense. And another one that I like is Warren Buffett. His first rule is not to lose. The second rule is not to forget the first rule. It actually is, first rule is not to lose money. Second rule is remember rule one. But with that being said, you could have saved yourself a lot of headache if you were just not a buy and hold investor. All right, what was I saying? So as opposed to just being a buy and hold investor, let's just imagine your 401k was here, and you were retiring right around 2007. and boom, it just kept going down and down and down. And you decided to hold all the way to the bottom. And these are your retirement years that you needed. So now you're 5 years into retirement and you've already used a lot of the money, and it finally goes back to even. But if you were to just use the simple strategy of when it goes to the 200-day moving average to sell and hold cash until it goes back up, then you'd buy in here. So you would have sold here, and then you would have bought in right around the 94 when you sold at the 140, 150 mark. You still would have made a really good profit, and then you would have sold again, bought again, and just simple strategy. So I know a lot of people say that the trading methodology doesn't work for cryptocurrency. I personally think it does. I think if you look at the charts, you can see what's going on, you can see how to react to them, and you can try to leave a lot of the emotions out as well. So what I'm saying is the big buy signal or sell signal that we have going on here is, if you look at our chart right now, where are we? We're below the 200-day moving average. There was some bullish market going on here when we were looking to get that EFT approved, but since as of yesterday, it seems to have reversed. And so this is a good sign. Our next support is going to be our 50-day right here at the 7,200. We're about $600 off of that. The good news is the selling may have stopped because our relative strength index, this RSI, we're roughly around 32. So anything below 30 is meaning that the market is oversold, just meaning that there's no more sellers. And if it's over 70, it's overbought. So if we look back here, we were right around that over 70, right when everyone was buying and pushing the price higher. So that's something to consider as well. And anything below 50 is you're entering fairly a bear market. As we can see, as things start going down, where are we at? We're at 50, it goes lower and lower, and there we are. The true sign is if these were stacked up on top of each other. The 200's way down here. We have the 20-day, the 50-day, and then the 200-day. And if our price was all below that, so if they were actually down here, then that would be a very strong signal as we're in a very bear market when it comes to Bitcoin. As of right now, like I said, since we are below that 200, if you want to jump into the market, by all means, jump into the market. It's only risk what you're willing to lose. I don't see any uptrend starting until the near future. I know the next big deal is going to happen September 30th, is that the EFT, the SEC is going to decide whether or not they're going to add an EFT, to. So that is my big sell signal for Bitcoin. Take it for what it's worth. If you guys want some more information about charts, I want to start giving a little bit more information on the trading side of things as opposed to just news when it comes to stuff, because if we can try to be less emotional about trading, statistically you'll make more money. And so just in conclusion, when it comes to looking at a chart and you have a signal that's telling you to sell, what's a typical thing that people try to do? They go, oh no, there's going to be a huge bounce back. And, so there's people that bought way up here that are waiting for a huge bounce back up to 19,000, So my suggestion is never wait for a bounce back. Set your signal, whether it's at the 20, the 50, make a signal and stick with it. Your opinion doesn't matter. Look at the chart. Whatever your signal is telling you, follow that. Other people's opinion, yes, this is a small market right now, so it's very apt to being manipulated by news and such. But just look at your signal, follow the chart. 9 out of 10 times. Now, I wouldn't say 9 out of 10 times, but you're going to be better off just in the long run.